कौन से मीडिया में डालना है ये तो बताइए।
NDTV
इन्फॉर्मेशन
कहाँ से हैं आप?
हम तो हिंदुस्तान से ही है, बेस्ड ऑफ दिल्ली है।
दिल्ली से?
हाँ जी मैडम।
दिल्ली में कहाँ से?
दिल्ली में रहते हैं मैडम हम। वो देखा आपने शादरा?
राघव जी, आपसे आपको डर बिल्कुल नहीं लग रहा कि ऐसे न्यूज़ चली जाएगी, लिख जाएगा, छप जाएगा, ये आपको बिल्कुल उसका ऐसे हल्का सा भी खौफ नहीं है?
मैडम एक बात को खौफ किस लिए रखना चाहिए तो बताओ, कौन सा गलत काम कर रहा हूँ मैं?
अरे आप बोल रहे हो कि क्या कहते हैं, बिना सेबी रजिस्टर्ड एंटिटी के एडवाइस दे रहे हो, जानकारी दे रहे हो।
एडवाइस किस बारे में दे रहा हूँ मैं? एडवाइस
रिटर्न की गारंटी दे रहे हो।
100% दे रहा हूँ मैडम। आप ट्राई करके देख लो कि आप पैसे डाल के डिपॉजिट करके ट्रेड करके विड्रॉल तो देखिए कितना फास्ट देते हैं आपको। आपका जो बिजनेस है वो आप करिए, मेरा जो बिजनेस है मैं वो करूंगा मैडम। अगर आउट पूछना चाहे तो बिल्कुल पूछिए, बेझिझक पूछिए। आपको मेरा पर्सनल नंबर चाहिए वो भी ले लीजिए मैडम, कोई प्रॉब्लम नहीं है।
बताइए आपका पर्सनल नंबर क्या है?
585 पहले लगाना पड़ेगा आपको +971। मैं आपको इसी नंबर पे व्हाट्सएप कर दूंगा।
अच्छा चलिए कर दीजिए। ओके।
After this call, NDTV Profit broke the story first on its website. And on the same evening, India's leading bourse, the National Stock Exchange, came out with a cautionary circular for the investors. First off, they said that this platform trading Toast is not to be trusted and investors should not associate themselves with it. Secondly, they asked the investors, advised them to steer clear from these Dabba trading activities, all these schemes that lure them and promise them high investment returns. After this, we decided to give this Raghav person another call to ask him how he felt about the NSE circular. First off, he would like to tell the viewers that first number on the newspaper ad did not go through, and the second number did allow us to speak to him after 2 attempts.
हेलो
हेलो राघव जी, आवाज़ आ रही है?
बोलिए मैडम।
सर आपने कहा था आपसे बात करनी हो तो आपको कॉल कर लूँ, तो इसी
बात करनी है, मेरी तो बात हो गई आपसे कल।
नहीं, मुझे आपसे बात करनी थी इसलिए मैंने किया था। अगर आपके पास 5-6 मिनट है तो मुझे कुछ चीज़ें पूछनी थी।
किस बारे में पूछना है मैडम?
सर आपने कहा था कि क्या कहते हैं, ये गलत नहीं है डब्बा ट्रेडिंग या जो भी चैनल है, और ऐसे बहुत सारे लोग हैं, तो क्या आप बता सकते हैं ऐसे और कौन कौन से प्लेयर्स हैं जो कर रहे हैं?
कौन से न्यूज में देना है आपको?
मुझे बस जानना है कि और भी लोग हैं और नंबर्स हैं।
नहीं, हमारे पास इतना टाइम नहीं है मैडम कि आपके लिए हम कंटेंट दे आपको। हमारे बहुत काम है करने के लिए मैडम, दोबारा फोन मत करिएगा प्लीज।
अच्छा, तो आप ये बता सकते हैं कि आप यूएई का नंबर क्यों यूज करते हैं जबकि आपका काम दिल्ली से होता है?
मेरे पास है ही नहीं यूएई का नंबर। आपको कौन बोला मेरे पास यूएई का नंबर है?
आपने मुझे दिया था, शुरू किया था बोलना, लेकिन फिर आपने बताया नहीं पूरा नंबर।
नहीं, है ही नहीं मेरे पास यूएई का नंबर। आपने कल छाप दिया है, देख लिया हमने पेपर, ठीक है, कोई प्रॉब्लम नहीं है। आप करिए जो आपको लग रहा है करिए, आप हमें प्लीज डिस्टर्ब मत करिए। हमें हमारा काम करने दीजिए, आप अपना काम करिए।
क्या आप यही काम कंटिन्यू करेंगे जो आप कर रहे हैं?
100% यही करूँगा मैडम।
ठीक है, और कब तक करते रहेंगे, कब से कर रहे हैं?
क्या करना है मैडम आपको?
सर जानना चाहती हूँ, ऐसे जर्नलिस्ट पूछ रही हूँ।
आज ही चालू किया मैडम मैंने काम।
क्या?
आज चालू किया, आज से काम चालू किया, न्यू बिजनेस।
नया बिजनेस? कौन सा नया बिजनेस?
मेरा नया बिजनेस चालू किया मैंने, डब्बा ट्रेडिंग का। डब्बा देता हूँ घर में जाके, दाल चावल रोटी सब्जी।
और फिर उस एड का क्या हुआ जो आपने डाला था नवभारत में?
कौन सी? मैंने कहाँ डाली एड? गलत फहमी हो गई आपको।
यही नंबर है न्यूज़पेपर के ऊपर, एनएसई का सर्कुलर भी आया कल शाम को इसी बात पे।
मेरे को नहीं आया मैडम कोई सर्कुलर, क्योंकि ये नंबर मेरे को बिलोंग ही नहीं करता।
तो फिर आपने ये नंबर उठाया कैसे?
मैडम आपके पास और कोई काम नहीं क्या?
नहीं सर, जर्नलिस्ट हूँ, यही काम है मेरा।
हाँ, तो हमारा काम तो हमें करने दीजिए ना। हमारे बहुत क्लाइंट एक फोन आ रहे, दोबारा प्लीज आपसे हाथ जोड़ के विनती, कॉल मत करिएगा। थैंक यू वेरी मच जर्नलिस्ट मैडम।
As you all just heard, Raghav had changed the meaning of Dabba trading itself by the end of our call. This particular platform, trading Toast, is likely to disappear and reappear in some new avatar. And investors like you and me will be lured into such schemes every single day using Telegram channels, YouTube channels, WhatsApp calls and SMSs. And we must exercise extreme caution before putting our money in such schemes. Charu Singh in Mumbai for NDTV Profit.
So, I certainly was a little taken aback at the tone and tenor of the voice that this Mr. Raghav used when he was speaking to Charu. And there was absolutely no hesitance. Of course, at the end of that conversation, he changed his tone and he said that he was actually delivering dabbas and not dabba trading. Deven Choksi, Managing Director of DR Choksi Investment Managers, joining us now. Deven, thanks so much for taking the time. I hope that you heard at least a portion of that conversation. Are you surprised that people are unafraid to carry out what is essentially an illegal activity?
Yes, Alex, good morning. Well, I think not completely surprised though. I think because they are carrying out illegal activity, they know the perils and the consequences of those activities. Unfortunately, I think these illegal activities are happening in the system also because of the byproduct of our age-old trading norms and the rules. Today, I think in these times, when you have a complete blockchain in place to, I think, trace all your transactions, starting from order to the transaction, for banking, from stockbroking, for depository, for everything, you are still maintaining a kind of a system which was then installed at the time of introduction of derivatives. We started derivative market with 1 lakh rupees worth of market lot. Today it has become 20 lakh rupees worth of market lot. I don't understand the need for this particular market lot. Because of this market lot, which is a restriction that one has created, the fallout effect of this market lot is dabba trading. If you don't have market lot, then dabba trading do not exist. Now the question is that I think we are creating market lot for the safety of investors. 9 out of 10 investors are losing money. Where is the safety? So I think this is a subject I think which needs to be introspected a little bit more in detail. I don't necessarily blame, I think, the entities who emerge to take the inefficiency into their account and probably make money. We have seen Jan Street, I think, doing that. We are seeing local traders doing it. Inefficiencies, everybody wants to make money out of it. I think it's not their fault. It's a lacuna in the system which they are capitalizing as I see it.
Interesting. That's an interesting take. Devin, hi. Mahima also joining in. It's not just these scams, right? There are also scams going on where, people are just creating WhatsApp channels, Telegram channels, and going ahead and giving stock recommendation in terms of trading as well as, fundamentally buying the stock. If there's somebody who wants to begin trading today or investing today, what should that person keep in mind? There should be, I feel there should be an SOP that every investor should, be aware of, that these are the 3 or 4 things that I should keep in mind before joining any of these WhatsApp channels or Telegram group, or before approaching anybody like Raghav.
So Mahima, I think my whole take is that I think every investor, I think, as they always say, the buyers beware. The investor also requires to be aware about, I think, certain rules, regulations, and the regime of the regulators. Unfortunately, I think he is a sophisticated investor who knows about everything. But the one who is not so sophisticated is only concerned with, I think, easy part of making money. He is getting into this particular trap and he is playing around. He does not even ask a question that who the person on the opposite side is. In fact, I think there are instances of impersonation in WhatsApp and Telegram accounts wherein people are cheated, their money, they are duped, I think their money has gone. All those things are happening under our nose. Maybe I think regulators are operating separately. The banking regulator operates separately. The security regulators operate separately. I guess I think it's time that finance ministry or government takes up this particular call, make all regulators work together and ensure that I think there is no such a loose end in which I think people can take money out of somebody's account by way of impersonation on WhatsApp or on Telegram or any such kind of social media channels.
Devin, and ultimately, as you said, it's buyer beware. But from the perspective of managing expectations, I think what we've seen in the recent past is change of regulations in the derivative space, where the regulator is attempting to at least hold back some of the fervor that people have, and the fact that so many individual traders have lost money. So would you say more than anything else, it is setting of expectations? If somebody is promising you to double your money in 30 days, or in that kind of time, it's something that any top investor in the world would be incredibly happy with, but nobody's achieved, right, Devin? So would you say that setting your expectations more than anything else is the most important thing?
Provided you are self-aware, I guess I think you are absolutely right in your question. But you as an investor, I think you don't have greed. I think that is impossible. every individual person, I think, would have a smaller big greed. I think that is definite and that is a fact. So when you have greed, I think this kind of outcomes are bound to be there. It's not going to be very surprising if this outcome is not there. In fact, I think to teach them the right methods, you may do the public awareness program that you have been doing as an exchange, as a regulator. Everybody is doing this kind of program, but still it is happening and it is still unfolding. Remember well that I think we are still not 50-60 crore investor accounts in the country. I think for a size of population, we still have only 10, 20, 12, 13 crore kind of an accounts in the country. I think if they have multiplied by 4 times, 5 times, this is even going to take a bigger shape. In my viewpoint, I think it is a regulator who has to basically install correct practices. Today, I think this particular market, and I'm taking the liberty of explaining this part a little bit, I think here, that today this market, which was evolved in 2000, derivative market, has now completed 25 years. In 25 years, what has changed? Probably nothing has changed, I think, except creating the larger and larger hurdles. That is not the solution. In my viewpoint, there are 3 different classes of players in the derivative market. One is a proprietary trader who is coming either from the local or the global side. I think what we have seen in recent days, one example. The institutional players who use derivative market for also the hedging purpose, and the retail who basically use the derivative market for leveraging as well as for hedging purpose. Now, if these 3 classes of players, they operate on one single platform with the same set of rules, the disaster is bound to happen. You are driving a bullock cart and you are driving a racer car on the same expressway. You are bound to meet with accident. In such situation, I think these 3 classes of players, I think, should be segregated, not from the price discovery point of view, but from the execution window point of view. The product differentiation has to be created for 3 segments. If you want to stop the menace of, I think, this Dabba trading, or I think the higher amount of greed which is getting generated in the minds of people, I think this kind of system will have to be created. This system has the power to, I think, control the kind of, I think, nonsense which is happening in this particular place. If we can handle that part, I think that can possibly give a relatively better solution in my viewpoint. That is why I'm insisting that the remodification or the modification of this particular system is required at the uppermost priority level in my viewpoint.
And that's a very important point that you're making. Just another illustration of that is I can choose to have a 100-meter race with Usain Bolt, but I have absolutely no hope of winning that race. Devin, thanks so much for joining me this morning. Pleasure speaking with you as always. All right, so this was an attempt to draw your attention to some of the strategies that people are using to take your money away. In no other uncertain terms, effectively this is scam, and beware is the message that we have for you, and spot the scam with NDTV Profit. All right, now back to Ask Profit. And this, of course, you know, is the right platform for you to ask your questions on stocks. And so the next question we'll take is on HDB Financial Services. Of course, you know that the IPO was done recently. And we've got Puneet, who's writing in, who bought at levels of 840. And he's incurring a bit of a loss right now. Stock is currently at 813, 814. Remember, the results came out not too long back, and there were a few issues that cropped up, not least of which the trajectory of commercial vehicle loans. Mr. Choklingam, if you saw the numbers and if you track the company, of course you do, I'm pretty sure you do, what would you suggest doing? What are the prospects?
Yeah, in fact, we have recommended subscribing to the IPO. But on listing day, we closed it. We suggested a sell. Purely based on the price to book value, it was a little stretched around 740. The price to book value was more than 3.8 times. So I would suggest wait, and in case the stock falls, somewhere close to 770, 75 range approximately, then one can consider buying for long term. Otherwise, above 800, even now the valuation is slightly stretched.
Right, so that's with regards to where HDB Financial stands. The next question, in fact, our next caller is from Murli, who's calling us from Bengaluru. Murli, hi, a very good morning to you, and thanks so much for waiting. How can we help you today?
Yeah. It's a long wait, but I think it's worth the wait.
Thank you. Go ahead with your question.
Yeah, I bought 300 shares of Encure Pharma in January 25.
Okay.
And last 9 months I didn't make any return, even in this market. And it has entered into an agreement with Sanofi for distribution of some of these products recently.
Right.
Yesterday or day for yesterday.
Correct.
But it's quoting a high P of around 81.
Correct.
Whereas can you switch over to Pfizer, which is quoting at just 31 PE, and which has shown good improvement in performance in the last 2-3 quarters.
Right. Okay.
It is in MNC also.
Correct. Okay, I got your question, Murli. I'll take this up with Mr. Choklingam. Mr. Choklingam, what he's saying is that he is already holding MCure, but he's saying that Pfizer is at a better P. And yesterday, MCure did sign an agreement with Sanofi India to broaden reach in anti-diabetic drugs, is what he's talking about. Do you think he should stay invested in MCure or shift to something like a Pfizer?
One can stay invested in MQ because if you look at PE, yes, it is slightly stretched around 38 times. But the point is that most of these pharmaceutical companies, the appropriate valuation apart from PE, one should also focus on enterprise value to annual pharmaceutical sales. There you get a lot of comfort because EV to sales is only around 3.2, 3.3 times, which is a very, very fair price for holding the stock for medium to long term.
All right, let's take the next question. This is on Mazagon Dock Shipbuilders, and Momita Biswas is writing in from Kolkata and asking about this. She's bought a level of 3,410 rupees per share, and she's wondering whether to hold it. She's a short-term trader. What's the view on the charts, Kush? A little pressure on the selling side.
There has been, and I think that could well continue. I don't see a V-shape kind of an up move on on Mazagon. In fact, some of the other defense names as well. However, the volumes that you're seeing on the downside are starting to thin, not just in the last couple of sessions, for the last couple of weeks. That's been the case, which means there's a good possibility that the bulk of the selling might perhaps be getting done. I would suggest a hold on Mazagon. Preferred to keep a stop loss around the gap, which is the 3030 mark. And if indeed that's broken, then the structure could worsen further. But if not, the stock could consolidate from here and perhaps see a mild rebound, and that's when you can exit. For now, hold the stop loss near the 3030 mark.
Hold is the view on Mazagon Dock. All right, our next caller, Shankar, is calling us from Kolkata. Shankar, hi, a very good morning to you. I believe you have a question on Kajaria Ceramics.
Yes, madam. I'm having 50 shares of Kajaria Ceramics, bought at 1174.
Okay.
Now the stock has been much below my purchase price for long.
Right.
But recently it has made an up move and is now trading above my purchase price.
Correct.
So I wanted to know, I'm a long-term investor, so I wanted to know if it would be better to book profits or should I hold it for say another 1 or 2 years.
Okay, got your question, Shankar. I'll take this up with Mr. Choklingam. Mr. Choklingam, any view on Kajaria Ceramics? Should he continue to hold for further upside?
Yeah, one can hold it. At least another 10% recovery is possible. I looked at the fundamentals. One can hold the stock.
Okay. Let me take the next question, and this is from Sagar, one of our very long-term viewers, and he's been investing for a while. Max Healthcare is the name of the counter that he's looking at. He's holding 4,200 shares, and this is as part of the demerger deal. The stock has delivered exceptional returns, he says. Do you see outperformance continuing going forward? Any projections that you have? Any niche or better stock in the hospital space with potential upside in the long term? And he's already holding a basket of hospital stocks like Apollo, Fortis, NH, as well as Artemis as well. So what, according to you, Mr. Choklingam, is the best pick out of what I've mentioned and the strategy that you would suggest on Max?
See, Max has already played out very well, and valuation is definitely stretched. We normally look at enterprise value per bed. I would not recommend a buy or hold Max Health. One can consider Apollo Hospital. According to me, that has got a lot of growth potential. And if somebody is willing to take a risk, definitely it is only for risk-taking investor, then they can consider Shall Be Limited. Personally, also we have invested in the stock. And it came out to the IPO around 246 rupees about 7 years ago. And if you look at operational bed and enterprise value, this is the cheapest hospital stock. So the kind of, the consolidation is happening in the market for hospital business. I believe Shall Be Limited has a potential to get re-rated. So, but that is only for risk-taking investor. Otherwise, conservative investors can consider Apollo Hospital.
Okay, our next caller, Dusoji, is calling us from Hyderabad. Dusoji, hi, a very good morning to you. How can we help you today?
Yeah, good morning. My name is Rasaji. I'm calling from Hyderabad. So this is regarding the garden shipyard. So actually I purchased 3,075 rupees for 99 shares.
Okay.
Now it is in...
Okay, go ahead. Yeah, go ahead.
So should I hold it or should I...
Okay, got your question, Dusoji. I'll take this up with Kush quickly. Kush, on the charts, Garden Reach, what's the view like?
Very similar to Mazgaon, selling continues, but the pace and the volume of the selling is going down. So just a hold, keep a stop loss near the 2475, 2480 zone and continue to hold. You could consider an exit on rebound.
Exit on rebound is a call on Garden Reach. So whoever else wants to know about that stock, there you go. That's the answer. It's time now to hit the rapid fire round. And this is where Kush as well as Mr. Chokalingam, we throw in many questions at you as possible over the course of 2 minutes. Starting with Exide, which Rohan has bought at levels of 384, and he's got a target of 450. He's willing to wait for 3 months. Is that a good strategy? Kush?
The target seems to be stretched for 3 months, but on the whole, I would suggest a hold, stop loss at 360.
Okay, the next question is on Bajaj Auto. Bharat is asking this question, wants to know if you can buy at the current market price for the next 3 years. Mr. Chokalingam, your view?
I would prefer TVS Motor for next 2-3 years over Bajaj Auto.
Okay, BEML, bought at levels of 4,329, and would you book profit or hold till March? 2025 is already done. 2026, I guess, is what he's talking about. Kush, what's the view?
So for now, I would book profit on BEML, consider a buy on decline close to the 4,200.
Okay, the next question is on Azad Engineering. Rajvardhan is writing in and wants to know if he can continue to stay invested in this counter for the next 5 years. Mr. Chokalingam, your view?
Sorry, I have not studied it.
Okay, the Kush, your quick view?
No view for 5 years on Azad.
Okay, Rajratan Global Wire, bought at levels of 607, around 387 shares. 2 years is a holding period. What should you do? Should you hold or exit? Any view, Mr. Chokalingam?
On any further rise, it can be sold. The PE ratio is highly stretched.
Okay, Vari Renewable, Raja from Bengaluru has 165 odd shares, wants to know if he can buy more at the current levels from a longer term perspective. Your view, Mr. Chokalingam?
I would not suggest buying because the entire renewable space is getting crowded in the business as well as in the stock market.
Okay, Raghu's been investing in BEL since COVID, and he's wondering whether he should buy again. He's booked profit and exited. Kush, what's the view?
Yeah, so you could start accumulating now, and maybe all the way up until 380 is when you can consider accumulating from here to up until 380. That way.
Okay, Kush, Mr. Chokalingam, thanks so much for taking the time and for answering all the questions that you did today. Absolute pleasure as always having you on the program. And that brings us to the end of this edition of Ask Profit. I understand that it's been a bit of a curtailed session, but we thought that message had to go to you. Spot the scam. It's an important thing to bear in mind, and spread the word is what we can tell you. And do stay tuned. Lots more coming up on NDTV Profit.
तू ही तो है जिसकी सच्चाई वाली क्लैरिटी की वजह से मैं आज यहाँ हूँ।
गोल्ड प्लस सिल्वॉक्सी मिरर्स, ऐसी क्लैरिटी कि आपको सिर्फ सच नजर आए, चाहे कितने भी साल बीत जाएं।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज और देखती है यहाँ तो सवालों का मायाजाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola?
Should I hold CDSL for the long term?
Buy, sell or hold.
The answers you need, straight from the experts.
Callers from India and across the world.
Hello and welcome. You're watching KYC. We've spoken about quite a few sectors on this show, and one sector that we've not covered is online travel. So we thought let's take that up. It's also a stock which is absolutely a buzz today. It's called Lert Revenues Technology Limited, and it's basically branded as Ixigo. So you would have obviously either heard about it or seen it or perhaps even used it. Let me first start off with what I want to know about Ixigo. The numbers for Q1 FY26 were solid. Are they sustainable is the first possible piece. But really zoomed out on a broader sense, it's a very competitive space, right? How is Ixigo standing out? How do they continue to plan to stand out in this very crowded marketplace? And they're doing good numbers, Mahima, frankly. And so what's helping those numbers is what I'd want to understand. Second is, what are the growth expectations and levers? And they're getting into new businesses, especially into hotels. Yes. So that's one possible lever. Also, the revenue is skewed towards train and flights. So there's a large gap where other avenues with regard to travel is concerned, which they can tap into quite easily. Whether they are planning to do that and what the potential for that perhaps is. So that's what I'd want to understand. Also, customer acquisition, customer usage has gone up quite sharply. The monthly active users have increased and not just inched up. They've nearly doubled up over the last year or so, which is all a positive. But what does that do to customer acquisition cost? Is that continuing to remain elevated? Our marketing expense continuing to remain high because it's competitive? That's an important aspect to understand. Can take rates further expand? And an extension to that, I'll take it to number 5. Take rates are basically your commission payments that you make on each transaction. And number 5 as well, I'll couple both of these by saying that, and this was an interesting observation which Sajid sir in our newsroom made to both of us. that train prices have gone up because of premiumization within the train segment.
Correct.
And most of those booking trains are actually booking through platforms and are booking the more premium trains. So both of those is tying up very well. And therefore, with that increased price, will take rates also go up? So maybe the rate doesn't go up, but the value goes up. And are we seeing that trend likely playing out on the numbers? Also, what are they doing with the excess cash? Because essentially they don't need too much investment. It's a capital light model. And therefore, what are they doing with the cash that they're generating? They've done over 120 crore of cash last year, and what the plan is going forward is what I'd want to know. Also, last off, there's no single promoter here, so that's one possible risk, that there's not enough skin in the game from management. But the other more important piece is that you have plenty of private equity players. If they start exiting, that poses a real risk, and is that risk as real as we are seeing it? That's what I'd want to really understand. But let's start off as we always do. By the way, Mahima, myself, taking you through the next half hour or so. Essentially, I'd want to first start off with what the company is about, if it's not already quite clear. But I'll quickly take you through it. It's India's largest online travel agency for the next billion users is what they call it. It empowers Indian travelers to plan, book, manage trains, flights, buses and hotels, even though buses and hotels are far smaller in comparison to the trains and flights. And Mahima, I'll probably take you through that mix. It's focused mainly on tier 2, 3, 4 cities and the mass market. They are also trying to integrate AI and technology as well as data science in all of their offerings. How is that playing out is going to be interesting to watch out in this very crowded online travel agency space. But Mahima, the rest of the company.
Right, so I start with the products. As you rightly mentioned, the biggest segment is the train segment, where almost 41% of their revenue comes from this particular segment. This basically includes, your ticketing business, of course, your confirmed tickets, your Tatkal tickets, plus the PNR status, the predictions, the live tracking of trains, plus the position of your platform, coaches, utility tools, etc. In this, there's also waitlist prediction, alternative routes, plus they also have the Exigo guaranteed, where if you don't get your ticket, which is waitlisted confirmed, there's a 3x guarantee feature also present on the platform. And there's of course IRCTC partnership for direct ticketing as well. Now in terms of flights booking, which is roughly 32% of their overall revenue, that's the mix. Well, again here ticket booking is included in terms of domestic, international booking as well. There's web check-in. There's also real-time information for your flights. If they're delayed, they update you on the app itself. In terms of price lock as well, there's a price lock feature where you can pay a slight amount and lock the price of a particular flight that you're eyeing on. Plus there's cancellation option, refund options available on the app itself. Then there's buses, which is almost 24% of their overall business, overall revenue. Buses basically, it's a platform where around aggregates of supply of around 4,000 operators is present, and that covers your 3.5 lakh plus routes when it comes to your road routes. So that's with regards to where the buses stand. Here also there is live tracking, there is operator rating comparison, there is also Abhi Assured, something that gives you guarantee and assurance of how your entire journey will be. So that's with regards to where these three products stand. Plus they've also recently entered into the hotel business. They've launched, it's not very recent, but in December 2023, and this what they're doing here is they're cross-selling their trains, buses as well as their flights along with the hotels. So they already have an existing user base that is present, and they're using that user base to now foray into the hotel business as well. So that's with regards to where hotel business stands. In other verticals, they also have their Gen AI, which is an excellent itinerary planner that plans your itinerary if you are on a vacation. There's AI travel assistance as well. There's food delivery on trains option that is available on the app, that is via the Zoop platform. There is also cross-selling and value-added products like travel guarantee as I mentioned earlier, plus there is insurance as well on the platform, and of course meals and cabs once you're out of train or flight or a bus. In terms of the business model, as Harsh mentioned earlier as well, it's an asset-light model. Digital business basically on app and website business that operates online, sells B2C, so directly to consumer. Indian travels via, of course, mobile apps and web platforms. The focus is on Indian markets right now, especially non-metro, your tier 2, tier 3, tier 4 cities, and they have offices in Gurugram. There's also a subsidiary in Europe, and of course operates delivery across India. So that's with regards to where their entire business model stands. And lastly, in terms of main dependency, now this is interesting because supplier access, of course, IRCTC is the main one for trains. There's airlines and bus and hotel partners, but in terms of their overall IT infrastructure, that involves your dependency on cloud computing, data tech, as well as API integrations, and of course the payment partners as well. So that is one key dependency that they have to rely on, and of course human capital, because their data is something that should be in secured hands when it comes to where one person is traveling from one place to another. So that's their main dependency. This is everything, a brief everything that you need to know about ixigo per se.
Perfect. Let's start off therefore with the metrics. We'll start off with the income statement. We'll look at operational metrics for this one, balance sheet, cash flow. We'll thereafter take up return ratio, shareholding, street cred, as well as valuation. So all of that to be covered over the next maybe 10 minutes or so. Let's start off with the income statement. Mahima.
Yeah, so in terms of the income statement, it's been a good run up for the entire company. If we take a look at the past 3 years of the performance, in fact even 4 years for that matter, the 3-year CAGR growth for revenue has been around 34%. The revenue has grown almost 1.5 times in the past 3 odd years. There's also EBITDA, which has seen a CAGR growth of almost 148%. Margins have remained fairly stable. I've seen a steady growth from that 2% mark. This is adjusted EBITDA margins from that 2% mark in FY22 to almost a 10% mark in FY25. Net profits, it was a loss-making company in FY22, around losses of around 21 odd crores, which has turned profitable since FY23, and the profits have continued to grow. Slight decline in terms of where FY24 was concerned, but overall a good growth where it comes to the overall trajectory of net profit as well. So overall a thumbs up when it comes to the income statement.
You want to, Mahima, take us through the Q1 numbers as well?
Yeah. So
as well as some of the operational metrics.
Sure. So in terms of the operational metrics, I'll go there first. Of course, the stock is buzzing today on the back of the Q1 numbers, but just before I go on to that, operational metrics, overall, the gross transaction value has been on a significant amount of, in terms of percentage also, it's been on a good rise, but in terms of the number as well, it's almost doubled when it comes to, your comparison to Q1 FY25 versus Q1 FY26. Even the annual active users have increased from around 480 million to 544 million. So that means that more and more people are signing up for the app. The take rates here, the take rates for flight has slightly declined from 11% mark to an 8% mark. For train, that has remained stable because train as a business is consolidating for them. There's bus where the take rates have slightly increased from a 10% mark to 11% mark because again, that's a growing vertical for them. So this is with regards to where these operational metrics stand, but in terms of the Q1 performance has been a stellar quarter for sure, this year. And this is because, their overall transaction value, gross transaction value has gone up both for flight and business. That's been around 80% on YOY basis. Plus in terms of the overall growth also, there's a great growth in terms of revenue, 73% increase in terms of their overall revenue. Margins are slightly dipped because of the major investments that they're making in the business, and that's the only reason as to why the margins have gone up, and of course their marketing cost as well going up. So that's with regards to where the Q1 numbers stand for ixigo. So overall a great set of numbers in Q1 itself.
Yeah, perfect. So a very strong set overall, 11% QOQ expansion on the top line, not looking bad. And even your adjusted EBITDA margins, Mahima, yes, they've come off, but it's really, really small. Let me actually pull out those numbers. So Q1 FY25, the adjusted EBITDA percentage was around 10.4%. It's now come in at 10.1%. The guidance continues to remain 10%. And full year FY25, they've done 10.6%. So it's extremely marginal. It's rather the growth on the top line that's really impressing the street, it seems. And sustainability of that is obviously the question. So that's how at least the income statement looks. Let's look at the balance sheet now. And in that sense, again, looking quite impressive. You're seeing book value at around 634 crore rupees. And when you're looking at the overall, the current market cap is around 8,000 crore after the run-up that we've seen today. So obviously considerable price to book, but it's a platform business, mind you. Something that you must know, that platform businesses generally have lower capex, and therefore your book value will always be lower and your price to book will always be more. Your cash and bank balance is fairly healthy as well at around 270 odd crore. Of course, that will they'll continue to build on that. As they build on it, will be interesting to see where they're utilizing that cash, because tech will be very limited in terms of its investment. It's more about how much can they expand this number and what they do with the cash flow. That will really matter. So, Mahima, cash flow.
Right, so overall cash flow position has also been healthy. I mean, if you see the overall trajectory of cash flow from operation, that's been at a steady rate. In fact, as compared to FY23, it's almost tripled, more than tripled. In fact, it's 4 times, from 31 crores to 122 odd crores. There's the overall, the cash flow from operations to PAT ratio is also healthy at 129% as of where FY25 stands. Of course, in terms of net cash flow position, the FY24 picture doesn't look very attractive, but overall FY25 on a net cash flow position basis, they have remained positive. So a thumbs up where it comes to the cash flow position as well. But as Harsh mentioned at the start of the show, right, that they're sitting on a huge amount of cash pile on on their balance sheet. We'll have to try to understand as to what are the plans with respect to the kind of cash flow that they're sitting on. Are there acquisitions that they're looking forward to? That is an interesting question to, or an interesting aspect to look at too.
Yeah, and what kind of acquisitions, if so? Because it's a business which is ripe for consolidation, so acquisitions are understandable. But where exactly is that happening? But the CFO to PAT is quite healthy, so no concerns there whatsoever. Now let me take it across and look at return ratios, because that's where you could see some bit of choppiness, and that we've seen. Whether this kind of early teens number is sustainable, well, it seems like it's sustainable, but we'll have to wait and watch for a year or two to see the sustainability of that. Also, the other piece with regard to this is early teens. How do they allocate capital, and therefore that will also determine where return ratios go, because they're going to be investing quite a bit of money and a lot of it is cash. Now, you want to see where they are investing that cash, because that will determine where the ROCE actually goes. If they are acquiring other businesses, that again is a risk. What kind of businesses are they acquiring? What kind of return ratios are those businesses playing at is what we'll want to understand. So we've given this a neutral, but shareholding, Mahima.
Right. So in shareholding, again, as you rightly mentioned, no promoter holding right now. Skin in the game is not there. And while, when they came out with that IPO, also the offer for sale was a big chunk of that IPO. It was 620 crores where, there was offer for sale for promoters as well as early investors. So that's one thing to keep in mind. FIS overall has maintained their stake in the company from a 58% in June 24 to around 59% in March 25. So slight increase there overall. DIS overall, again, a steady state of holding in the counter, around 9% stake in the company. And lastly, public shareholding has slightly gone down from that 31% mark to 30 odd percent mark, but no concerns there as well. But we've given it a thumbs down here because there's no promoter holding per se.
And the risks of private equity investors exiting. So both of those are real risks, and that's something which everyone needs to be cautionate about, if at all that's a word. Let's quickly look at street cred as well. And the IPO price was 93 rupees a share. Of course, the stock doing very well for itself post the IPO, which happened exactly last year, June of 2024. It's given 120% returns to investors. 48%, of course, was the return which they've got post the listing itself, which happened at 138.1. So even if you purchased it at listing, you still made a decent return on this one. The 1 year stock price performance is 18%. Year to date is 14%. 6 months is 42%. And the 1 month performance is 11%. So across the board, this is clearly a business where the management has kept enough value on the table for investors. So, but that's with regard to street cred. Let's quickly also look at valuations. Now, the guidance is late teens to maybe 20% kind of top line growth. The price to earnings multiple currently sitting at 125 basis the 8,000 crore market cap, which it has just touched today. It is likely that it will trade at around 79 times FY26. This is as per Bloomberg analyst estimates, but just 3 analysts cover this one.
Yeah.
You've looked at this, Mahima, you want to spell it out?
Yeah, just 3 analysts covering, and just on that valuation perspective, I mean, very expensive to its peers as well, right? Something like an IRCTC or a Yatra Online or Easy Trip, all of these trading, although they are also not cheap, but trading in that range of 36 to 40 odd P, but the current P for Ixigo for sure is way higher than its peers as well.
Well, let's sum it up. That's all our rating parameters on the screen, and we'll quickly come to the KYC rating. Some of these numbers were quite impressive. Of course, shareholding a bit of a concern. We spoke about 5.5 on 8 is what it commands on our KYC rating. But let's bring on board Mr. Alok Bajpai, Group CEO at Ixigo, joining us as we speak. Alok, good morning from where you're at. In fact, good morning from where we're at as well, but it's fairly early for you. Thank you so much for joining in and speaking with us. Alok, let me first start off with that top line growth. It was very strong in Q1. Can you continue this kind of 10% QOQ expansion, or were there one-offs here in this quarter?
Well, there were no real one-offs here. I think what you're seeing is the outcome of a journey of more than a decade, right? So I think if you look at why Ixigo is growing at the pace at which we are growing, it's a function of 2 things. One, the kind of market we are going after, and we chose to go after the underserved next billion users, or the Bharat India 2 part of the market. And I think even though it took a bit longer to build the business, and of course build deep inroads into train, bus, and flights now, I think the fact is that it's a much bigger audience to cater to, right? Only 4% of Indians fly, but when you look at the numbers of people taking trains and buses, it's an order of magnitude bigger. So we kind of built a very large base, and we are now able to monetize this base. And this kind of growth has been coming in not just for a quarter, but if you look at our entire history, our CAGR, for the last 5 years has been quite good as a result of the fact that we've just started monetizing the large base that we built over several years. Will this kind of growth continue going forward? I think it's a function of 2 things. One, are there things we can do which we don't do today? For example, hotels is a category that we've just entered, and we have started to make some inroads there, although we don't disclose at this point, but we are seeing quarter on quarter growth starting to come in there. And of course, can we monetize our existing base even better with value-added services? So you would have seen that almost 29% of our transactions, have some value-added services also sold on top, which offer peace of mind protection. So our take rates are improving. Our contribution margin has remained fairly stable. There's been a slight dip in CM percentage, but that's deliberate because we want to chase growth at this point.
Alok, hi, Mahima also joining in. Just want to get a sense on competition. How is it looking like? What's the landscape? Because that's changing very fast. Just want to get a sense about that. And how do you think that you are standing out when it comes to, the other players who are doing the same thing?
I think Ixigo's story is a bit of a blue ocean story in that sense, because we chose to go after an underserved market where there was very limited competition, and in a way we are creating new market. Even if you look at our growth in competitive categories like flights, where there are multiple OTAs doing flights business, I think what stands out for us is the ability to tap into the first time flyer segment, which is coming, largely from people who today might be traveling on a bus or a train, and tomorrow, have the capacity or the per capita income to actually upgrade them. And the fact is, because a large part of this ecosystem is already using us, if you look at our user base, more than 500 million users in last fiscal year have actually used us at least once. If you look at our monthly active users, 84 million monthly active users. So in that sense, I think we are at a crux of, we are at that inflection point where you start to see that monetization start to see the bottom line coming in with the operating leverage. And I think it's just a start in many ways for categories like flights and buses, where the penetration that we have is still much lower. So on trains, we are the market leader with 60% share of the OTA market. On flight, we would be the third largest player. Obviously, we'll wait for the others' results to see how they're growing. But we have been growing the fastest over the last 4 quarters. Buses, we are the fastest growing player and the second largest player. At an overall level, we are number one on user base and number two on revenue and GTV. That's where we are today.
Look, how do you continue to stand out in a marketplace that is this competitive? And you're getting into hotels as well. How does the scale up in hotel happen? Will it be, or rather, you've done this since December 23, but give us the strategy here. How will you stand out? Again, it's a crowded marketplace.
Yeah, I think every category that we entered was, I mean, we were not the first train booking site, nor were we the first flight OTA or the first bus OTA. I think every category we entered was already competitive. The only reason why we continue to grow and take share is because we are very focused on customer experience, right? So we were never obsessed just about selling tickets or monetizing, but actually going and solving deep utility problems in every category. If you look at products like Flight Tracker Pro or our ability to manage trips with AI, or if you look at our train tracking capabilities or train PNR prediction or the travel guarantee product that we launched, these are innovations that have come out of deep understanding of what people want and solving for their pain points. And a similar story, will hopefully play out, in other categories we enter, because even if you're a late entrant, the advantage you have is to look at that category with fresh eyes and figure out what pain areas haven't been solved yet.
Alok, when I was looking at your take rates, the flight take rates have slightly come down, year on year, but train take rates have remained stable. So I have a two-part question on this one. How do you see this improving? Because train take rates have consolidated, flight take rates are coming down. Is there a scope of improvement in both of these cases? And secondly, in the start of the show, Harsh was, he did mention that one of our senior did point out that there is premiumization of trains that is happening, right? So does that impact your take rates? How does that work? Try to, make us understand that.
Well, our take rates have been fairly stable, and in fact, they may have improved slightly on categories like flights and buses. But some of that is optics also, because last quarter, the fares on domestic actually came down a bit due to some of the turbulence that the sector was experiencing as a result of Sindoor and then AI 171. But if I look at the broader, bigger picture, right, the take rate comprises of, what kind of convenience fees exist, and there's commission, and there's also value-added services. I think our ability to have latch-on value-added services and the ability to also, figure out through data science and AI, what kind of pricing and what kind of essentially personalization one can do around who to market it to or sell it to. I think that cross-sell, upsell funnel has really started to work. So you can expect that take rates are fairly stable. I mean, on train, we've been centered around 6%, and it's a regulated industry. So I think we've been managing to maintain it around that number, slightly plus or minus here and there is okay. But on buses, we've managed to improve it from 10% to 12% over the last 1.5 years, if you see. And I think we are at a point where we are satisfied with where we are. So we don't see any major changes happening there.
Alok, two quick questions. I have only 30 seconds left. So what do you do with the cash that you're going to be generating? Where do you invest? And second, what's the risk like of private equities exiting? How large is that?
Well, I think on the use of cash, I think we've always been very conservative on these things. I mean, ixigo was built with very little capital and very little cash in the first 10 years, first 15 years of our existence, right? And I think we will, use cash effectively only where we see an opportunity to. And even at the time of IPO, we said we are always on the lookout for great companies. We've already done 3 acquisitions: Confirmed Ticket, Abhibus, and Zoop, and all 3 are playing out nicely. We will be on the lookout for investments and acquisitions out there. And also, in terms of opportunities like hotels or developing more AI products, we will not be shy of investing over there. And I think, what we expect is that look, cap table churn, etc. I mean, every company goes through that life cycle, but I think if we continue to deliver on our promises, I think that is less of a worry at this point.
Sure, got it, Mr. Bajpai. Thank you so much for joining us this afternoon, or rather this morning. Viewers, in fact, that's all the time we have. So we'll have to close this at this point. From Mahima, myself, everyone who puts the show together, thanks so much for watching.
That's huge. That is a biggie. It's out of
गोल्ड प्लस क्लियर ग्लास, पार हो या नियर, सब कुछ दिखे क्लियर।
जनता के पास सवाल ही सवाल है, जवाब ढूंढने को वो देखती है न्यूज, और देखती है यहां तो सवालों का माया जाल है। ऊपर से ये अलग फाइट है, कोई पूरा लेफ्ट तो कोई पूरा राइट है, बीच में मुद्दे के साथ कौन है, जनता को जवाब चाहिए। इसीलिए सवालों की परेड नहीं, मैं लाऊंगा खबरों की कचहरी। मैं शुभांकर मिश्रा, मेरे साथ देखिए कचहरी रात 8 बजे सिर्फ एनडीटीवी इंडिया पर।
Imports become the exception rather than the norm, and increasingly we do almost last year, for example, of the contracts that we signed of record 2,09,000 crores, 81% was awarded to the domestic industry. Our intent is to manufacture in India, preferably with design also in India.
I am so elated to be on the same screen as the Defense Secretary, and I get a chance to talk about what he said.
In certain areas, like for example, artillery guns and armored vehicles, or in some categories of missiles like the BrahMos and the Akash, we've come of age.
What Defense Secretary Sir said is 100% true, and today private industry can really increase their involvement in R&D.
I am very proud to say that we make, in our categories that we have been supplying to our defense forces, some of the best platforms in the world.
The markets move fast.
And so should your portfolio. Expert insights, real-time stock picks.
Do I buy Ola? Should I hold ICICI?
The real estate space is something that you should keep your eye out for, as DLF is marking its entry in the Mumbai region. Now it's marking its entry in the region with its West Park Phase 1 project. But to talk to us more about the details and its overall strategy in the MMR region, we are joined in by the chief, we are joined in by Akash Ori, the joint MD and CBO of DLF Home Developers Limited. Hello, Mr. Roy. Welcome to the show. It's a big day that you're marking your entry in the MMR region again. I just want to get your overall sense in terms of the West Park project that we are seeing the Phase 1 in focus particularly. What is your strategy going forward with the MMR market?
Well, thank you first for having me on the show. So as far as we are concerned, DLF is extremely excited to be in the Mumbai market. There's a product that we've conceived for the market, and there is a certain legacy and a lifestyle story that we kind of bring in, which we are bringing in. So I think it's going to be a real good relationship.
Mr. Ori, the expectation is that with this project launch, the pre-sales that the markets and the analysts are building are in the range of 2,500 crore of sales. Are you fairly confident of achieving this number or even overachieving this number?
Well, I think everybody's kind of gotten used to DLF selling in 1 day, in 3 days and everything else. Mumbai is a different market. It's a new market for us. I will tread carefully. We are extremely buoyant, extremely excited. And I think, see, right now we've been saying this for some time now, that we will do this in two phases. The first phase of this particular launch is happening now, as you see, and then followed by the other one. But I think so far we're extremely grateful of the response we've received. There is a certain sense of even ownership that has already been created. A lot of people who've been aspiring to get a DLF home and wanting us to be here, to make homes and memories for them for life, are welcoming us. So I think right now it's been a pretty warm welcome.
Okay, Mr. Auri, can you give us some more of a detailed outlook in terms of this project launch, in terms of the towers which are going to be launched in phase 1, phase 2? What is the kind of expected timeline for the phase 2 as well? And what is the overall pricing that we are looking at? Because if we are looking at the range, it's in the range of 5 to 7 CR that we are looking at. Is that the correct value that we are seeing?
No, I think, see, right now, overall, the project right now, in the first phase, will be about 4 towers. And then the next phase will have another 4 towers. It's a nice integrated project. We're bringing in the DLF amenities. It's got a beautiful eco deck. And when I say amenities, I'm talking about bowling alleys, restaurants. There's a rooftop restaurant, and other facilities that go with it, a gym, spa, other food and beverage facilities. So I think this is something that Mumbai is going to enjoy. As far as price points are concerned, it's between 6 to 9. That range is what I'd like to give you. But initially, yes, obviously there will be a little benefit, and post that, then things will kind of ramp up.
Okay, also just want to understand your strategy behind the re-entry in the MMR region that we are looking at. What has changed this time? Because, earlier you had made an entry in 2005, and this was by a land acquisition that we'd seen in Lower Parel, which was eventually sold off to Lodha developers in 2012. So what is the strategy this time? How is it different from the last decade or so?
Well, at that point in time, I think priorities were different. We entered the market, but we also did, even that transaction was of good value to us, as you may know. But right now, we realize that our footprint is been now across 20 cities all over, and Mumbai has been calling us for some time now. And I think what is important is that investors and end users have been wanting DLF to come in, which is pretty heartening to kind of see. And that has prompted us to make this re-entry. And we've partnered with Trident right now, Trident Realty. We're in a very buzzing place around Andheri West. And the product itself is something that people are going to enjoy not only owning but living in. So as far as we are concerned, opportunities are coming in as we speak, to do other things. But I think one step at a time. We want to get this thing going first, and we brought in our trademark product and service lifestyle that generally DLF is known to do. So that's what we're going to do.
So in next 2 to 3 years, this is going to be like 2 phases entry as you spoke about. But what is the overall kind of launch pipeline that you see in Mumbai?
Right now, I can only comment about this to you. As I said, there are so many things happening, some very good proposals on the table. But first, we want to get through this. And you will see future announcements from us for Mumbai, and the products and offerings and services will definitely get better. So that is something that you will have to wait for this. Please keep watching this space. But as of now, I think all attention, all energies are on this project. And as you know, anytime and every time that you kind of come into a new market, you continue to learn, the ways of the market, and you need to respect them. So I think at this point in time, we'd like to, bring in DLF into Mumbai, and kind of get that off the ground. That is where all our energies and time right now are going to be dedicated. And post that, you will hear from us hopefully soon.
Okay, fair enough. Now, in terms of, Mumbai is one launch that we have awaited. You already have the DLF Privana North launch, which saw about 11,000 crore worth of bookings. Considering the Goa launch also in the second half, the launch pipeline is of around 17,000 crore. And pre-sales expectations are same as last year in the range of 20 to 22,000 crore. Just considering the response that we saw for the Privana North, do you expect an upward revision in terms of whether pre-sales guidance is given?
See, we've just about started. It's been one quarter. Right now, we'd like to keep the guidance as is, because there are, as you rightly said, a launch here followed by Goa. And then, of course, we've got the second phase of Dahlias coming in, which is our super luxury offering in Gurgaon. Then there's some residual sales. We've got our quarters pretty busy right now for us to launch another project. Make no mistake, we're capable of launching and, of course, bringing it to market and selling them in no time. But I think at this point in time, right now, we've got our hands full. Dahlias is a very, very important project, as you are aware, post Camellias. That's going to take a lot of our time in Q3 and Q4. Again, very large ticket size, individual sales as well as the entire project. So right now we've got lots happening. We've got, and in fact, in the project pipeline, if you've seen our analyst deck and our guidelines for the next 3 years, we are reasonably busy. But at this point in time, please also understand that 20,000 crores plus is also, they're very large numbers to continue to repeat. So happy to do so. But right now, I think one day and one quarter at a time.
Okay, just want to get a bit of that sense on Dahlias as you spoke about. Now, that is an important project. Now, if we see the pricing trends, it had been in particular focus, considering about 1 lakh of square feet was kind of the pricing that we saw for that project. Just want to get your overall take in terms of pricing in NCR region, because this is one of the regions wherein there has been most appreciation where the pricing has been. What is the kind of trend that you're seeing building on in the next few quarters or so? Do you expect this to stagnate, or do you see further growth over here?
See, super luxury in very many ways is price inelastic. Is also, please understand that there will never be, it's also a demand and supply syndrome. You will never see excess or more supply in super luxury because it's always going to be a limited inventory introduction. But even if you look at the NCR markets, buyers are coming from all over the world. Everybody wants to upgrade their lifestyle, and people who are at a certain level in the NCR market today, should they want to invest and live and be in a place that is commensurate to what their standards are internationally or domestically, this is the only place. The DLF Golf Links is something that is being built for that aspiration. We've had very successful ventures there, the Aralias, the Magnolias, and the Camellias, and now the Dahlias with 2 golf courses and a beautiful lake park. So it's going to be a development that is around absolute lush green environments, and what is going to be created there and is being created there is going to be a unique project. So I don't think money, there will be a time even money won't be able to get you in there, because it's going to be, if I can draw a parallel, it's going to be akin to the Central Park America story, where you have 800 acres of a green lung and you've got these apartments, that kind of are around you. So what is going to happen here is also going to be that. And at present, you've got a very eclectic mix of people. The Camellia itself is called the Billionaires Club. So I think a lot of good people already. They are the ones who make these communities. They are the one who attract. So they are the catalysts for others to come. But you will see this as we move along. Price will be an important factor, but will not be the only factor. You will see it go up because it is directly proportional to the services and what you actually want to pay for your lifestyle, your peace of mind, your security, and something that you can call as home.
All right, and still watching Markets at 12 with me, Shreyanti Singh. Let's take a quick look at what the markets are doing at this point in time. That, of course, was the word coming in from the management of DLF Home Developers, talking about their latest expansion in the city of Mumbai. But let's take a look at the Nifty for now, managing to just be near those 25,200 levels. Below those levels, in fact, sub those levels. Let's take a very quick look at the real estate pack, because that's the pack that is buzzing away in trade. Leading gains as well, followed by pharma, FMCG, as well as metals. Tell you what, let's connect with Ghulam Zia, who's the Senior Executive Director at Knight Frank India. Thank you so much for taking time out this afternoon and joining us.